Terrific. Well, thank you very much, Silas, and I'm excited to be here. I'm actually coming to you from Budapest in Hungary today. So for those friends who are here in Europe, what a heat wave we're having, eh? Yeah, look, the market is it's very exciting. We've got a great show for you today, and we're going to get right into some things that are going on right now. So let's kick things off. Of course, we've already covered the disclaimer. Thank you, Silas, for that. So we'll cruise on into discussions, but additional to what Silas mentioned, many of the positions that I'm going to discuss today are positions that I hold personally or in the Acorn Wealth Trading portfolio. So again, not a recommendation that it's suitable for you, but please be advised these are things that we hold in our personal portfolios. So yeah, let's get started. Again, my approach is all about systems. So especially when we're dealing with more and more and more inputs from all around the world, you know, StockTwits, TradingView, all the bulletin boards, there's so many people trying to tell you what to do with your money, and statistically, 80% of them will fail. There was a study done by a group that did the theory of analysts, and they actually watched for, I think it was over a period of a year, every stock alert or stock advice that was given on television, you know, on the financial news programs. And they found that 80% of stock alerts that were given failed, lost money. So 80% of the analysts on TV were wrong. They then followed economic theorists, and they found that almost 100% of economic theories were disproven within a few years. So when you start to realize that if you're going out to ask for help from the so-called experts, 80% of the time you're going to lose money. So how do you discern, you know, what's a good idea and what's not? Because that's not to say that there aren't good experts out there. We've got a show all day today full of them, of good experts. But how do you determine what's a good idea or not? And this is where we have to come back to data, a system that's going to tell us what the numbers add up to above the opinion. And that is above mine as well, because I realize I'm the pot calling the kettle black. So let's get into the data. What's the overall market doing now? Why is today's webinar called Market Meltdown? Well, first thing, let's talk about the big picture. Because there's a big difference between the health of the economy versus the health of the stock market, and so I'm not going to necessarily argue the fundamentals of the economy here, because I'm not an economist and I don't have much interest in economic theory. I'm here to make money. I'm here to find trends, to buy, to sell, and to put some cash in the portfolio. So really, the data about the market's what I care the most about. And that's where the valuations come into play. Because the stock market, if we look at a valuations perspective, put the economy aside, let's say we have a very healthy economy, fantastic. Valuations of stocks, however, are at very high levels because money's been really cheap to borrow. In fact, there's more money being borrowed right now to invest in speculative stocks and derivatives and things. More money being borrowed since the 1960s. So more than the housing crisis and the dot-com bubble combined. That's a lot. And that pushes stocks to very high valuations. This is an up-to-date P/E ratio, which is factoring in inflation as well as the 10-year historical earnings results. So this is called the PE max. And this shows you the levels that we've reached in previous crashes. Black Friday was 18.8, Black Monday was 18.6. The dot-com bubble, of course, was even higher. And as you can see, we're certainly in those dangerous thresholds where historically has spelt big trouble. Now, this can go on, right? The markets can continue to rally. We've seen that. We've been in toppy markets for a while. But what we're starting to see more immediately are catalysts that can cause problems for that. Because, I mean, all the this can continue to go up unless you have a catalyst step in that causes problems. And the trade war with China is an escalating problem that could be just that. That is the kind of the dark cloud hanging over this rally that could suddenly cause sell-offs, and then algorithms start to sell and the thing gets bad real quick. And that's where you get meltdowns or flash crashes and things like that. Now, the smart money knows this, and this is what I want to start off with when we start talking about smart money systems and smart money investors, the people that know well before the news media reports it, when it's already too late. If you look at the insiders, the people that run the corporations of the world, you'll be able to see here that we've got a large amount of insider selling that's going on. This is over the last 90 days. Okay, can everybody see that? Okay, great. Awesome. Okay, so 90 days, massive selling in services sector, massive selling in the technology sector. In fact, of course, there's more selling than buying in every sector. Now, let's look at the last 30 days. Notice, if I switch back and forth, that the amount of selling in the last 30 days, especially in the business services sector, has all happened in the last month. So again, you've got just a bit over $7.5 billion sold in the last 90 days, but close to $6 billion of that happened in the last month. So we're starting to see the amount of selling escalating into the last 30-day period. So smart money starting to head to the shorelines. They're selling their own companies. And then if we go one step further and we look at another even more interesting piece of data, I mean, we looked at P/E ratios. We can see that we're at levels that historically has always resulted in a crash. Every time over the last 100 years, we can see that the insiders are flooding to the sidelines, because they see that there's a heightened amount of risk, especially in the last 30 days. And now let's have a look at what the actual stock market itself is doing. Now, when I say the stock market, I don't mean the S&P 500, because I don't believe in this thing called the stock market. One of my mentors back 15 years ago said to me, one of the most important things he taught to me was, Johnny boy, there is no such thing as the stock market. It is a market of individual stocks, right? A market of individual stocks. I mean, unless you're trading the S&P 500 futures, and maybe some of you are, it's what the stocks in the market are doing that matters most, because that's what you're buying your options on. That's what you're buying stocks or shorting stocks on. It's not the S&P, it's stocks in the market. And that's a very different thing. So this indicator I'm going to show you is something that represents what stocks in the market are doing. And let's have a look. Okay, so this is 2015. We're gonna start by looking at what we can learn from the past. Okay, let's go back to 2015, and this is the S&P 500 or the stock market. You can see that the stock market goes sideways, May, June, July. In fact, nothing happens in the stock market. It's apparently going directionless until August 18th. On August 18th, the market suddenly melts down. It drops close to 12% in 5 days, which can wipe out profits very quickly. It can suddenly put you in panic mode, because now you may be going, oh God, what's going to happen next? And then the worst thing, of course, now is to sell your stocks at the bottom. And then the market rallies back up, you buy them on the way back up again, and then bam, it crashes again. I mean, these are very dangerous for people if you don't know how to predict these turning points, and better still, profit from them. You can then see that, here's this flash crash. The market then recovers all of its losses by November. And then on December 29th, just after Christmas, the S&P crashes 13% in a very short period again. So This is what the stock market did. But what did individual stocks do ahead of this? In other words, was this predictable? The answer is absolutely. Because smart money, insiders, algorithms that aren't involved in just the very manipulated indexes, which is what the Fed Reserve and things like that will try and hold up as long as possible in times of trouble, those things might rally, but individual stocks won't. And if you have a look at individual stocks versus the S&P 500, very different story. So remember, the S&P 500 went sideways from April, June, and July, and August. What did individual stocks do? Well, this is the indicator I was telling you about, which tells you stocks above or below the 50-day moving average. You can see that in April, 70% of stocks were above their 50-day moving average, a very important smart money level where institutions buy, where managed funds buy, etc. What you can see here is that those stocks started to drop from April on. In fact, by the time that the stock market crashed, we were already down from 70% of stocks above their moving average support down to about 30%. That's a significant decrease. The S&P 500 then recovered all of its losses and got back up to 70% in November. And again, well ahead of the next crash, the 13% drop, we were already down to 24% before Christmas, before the next market plunge. Can everyone see that? Does this am I explaining this clearly enough with my my raspy voice? Yeah. Excellent. I just want to make sure everyone's on the page. All right, so if we push forward, 2018, very similar. Market crash in late January, 2018, rallied all the way up to reach a high and crashed on the 3rd of October. Let's again have a look at what that indicator told us. All right, so there's January 2018. We rallied up to this 70% number again, this kind of magic number we keep coming back to. And went straight down. And then in the crash of October, we reached that 72% threshold in June. So stocks were already starting to sell off months before the S&P reflected that and crashed itself. So when you start to look at these things, realizing that this reflects what individual stocks are doing, not the manipulated indexes, this is telling you where the opportunity lies. This is telling you where key direction changes are likely to happen, where you start looking for the really good shorts. Because the really good shorts, when do you take those? You take those before the market crashes, because the individually weakest stocks, the garbage in the can, is going to drop well before the really good ones do. So you've got to start catching the ones you want to catch early, before the S&P reacts weeks or months later. That's where the big money's made. That's where the weakest stocks lie. Okay, now, this indicator has been a fantastic tool that we've used in predicting almost all of the crashes since Acorn started back in 2007. Now, so we've looked at a few things now. We've talked about the fact that the P/E ratio is at levels that historically has always resulted in a decline, a nasty one. We can see that the insiders are flooding to the sidelines at the moment, almost 300% more so in the last 30 days than the last 90 days. And then if we look at, again, that indicator that we just talked about, let's bring that up. You can see, here we go. Let's look at where those are now. Have a look at this. S&P 500 has been rallying, but notice that in February, we reached 85%. And ever since then, individual stocks have been on the decline. In fact, as of yesterday, only 28% of stocks are above their 50-day moving average. So you could say that we've been in a bull market for the last few months. But if you look at individual stocks, you'll see that that tells a different story. Does that make sense to everybody? So this is why I've been searching out some really good shorts. We'll talk about some of those in a second. But before we move on, I want to add one more piece to the puzzle, because this just happened on Friday. In terms of the technicals of the market, we're actually in a potential dangerous head and shoulder pattern on the S&P 500. Let me just get these moving averages and things off. Just keep it really simple. Okay, if you have a look at the S&P 500, which is what we've got on the screen. Can everybody see this potential head and shoulder that we've created? Right now, in the right shoulder part, we've had some congestion recently with all of the announcements and things like that. But this is if you zoom out to a larger time frame, this is the warning signal we're getting right now, a head and shoulder pattern on the S&P 500. Technically speaking, this could be setting up for a nasty drop. So technically, that's what we're seeing there. So what could be the catalyst that, combined with this, with everything we've just talked about, that could tip the balance? Well, let's talk about the trade war, because we are in the eye of a storm right now. And things just got set off on Friday. On Friday, this was the announcement released in China's national English language newspaper, the Global Times, under the People's Daily. They announced the new tariffs, right? So US stock futures crude oil plunged after China announced countermeasures against US tariffs on Friday. China will impose tariffs ranging from 5 to 10% on $75 billion worth of US products in 2 patches, effective September 1st and December 15th. They then went on to admit that this was released specifically at a time designed to cause maximum damage to the US stock markets. In fact, it was released here. As you can see, China's latest tariffs announced right before market open in the US on Friday, carefully designed to hit the US markets hard, essentially. Right? This is war. And of course, we tweeted back, you know, for many years, China's been costing us hundreds of billions of dollars, no end in sight. I will no longer allow this to happen in the spirit of achieving fair trade. You know, starting on October 1st, $250 billion of goods are now going from 25 to 30%. Additionally, the remaining $300 billion of goods and products from China that were going to be taxed at 10% September 1st will now be 15%, up 50%. Well, yeah, 50%. Thank you for your attention to this matter. So this has just happened. Now, it's funny how the fundamentals or the news starts to follow the charts. This is why I'm not a big economist or follow news much, because it's almost like these things are planned. In fact, you can see right here that that's exactly what they were. They were planned right there. As we reach a right shoulder in a potential head and shoulders pattern, China comes out and hits the US, and we respond accordingly, escalating uncertainty, escalating the potential for an all-out trade war. So just a couple of things to be aware of. So what I'm not saying that there is 100% certainty that we plunge several hundred points on the S&P 500 in September. However, I think that it would be foolish to be seeing all of these things that historically have always worked. The P/E ratio has always been a warning sign, not a timing mechanism, but a warning sign, where eventually it drops. The stocks above or below the 50-day moving average indicator historically has never failed. If you go back over 10 years, whenever we get up to over 70%, stocks do pull back within a maximum of 3 weeks after that being hit. That's never failed over 10 years. And we've obviously already started to plunge on that indicator. And we've got a head and shoulders on the S&P, which is the #1 most highest probability bearish pattern in a bull market. So while anything can fail it would be foolish to look at everything that's in our face saying there's a very high risk here. To just ignore it completely, I think would be insane. Could it be wrong? Sure. But there's a very good chance that we could see at least a 10 to 12% pullback in the S&P 500, and it could be worse. We've got to plan for those types of things. So that's kind of my market outlook there, and that we are at dangerous highs, and there is escalating tension that could lead to an all-out blowout. And we'll see how that pans out. And I think September 1st could be a very critical day or turning point where things could see some heavy selling pressure. Of course, September, October, November are typically the best trading months of every year. So what do we do about this? As traders, we take this information in, and we say, well, okay, well, how do we make money from this? Well, this is where we need to be very careful. This is where if we are going to go long on a stock, it needs to be a very solid idea. It can't just be, oh, my buddy told me about it. It seems like, okay, maybe it's a double bottom. That doesn't cut it in these markets. You need to have a long that has everything. So what does everything mean? Well, it means it has to have a very high probability pattern. It has to have insider buying, the smart money loading up. We want to see that the algorithms behind the scenes are buying it too. We want to see everyone and their dog buying this thing with the best possible technical rating you could get. Those are the kind of longs we want to have, the only kind of longs we want to have in this kind of dangerous market. But what it also means is it's time to start finding those really good shorts. It's time to start finding the shorts that are already going down, even when the market was going up. Because if the market drops, this is where those will get crushed and where really big profits can be banked. So let's start looking at what those trades look like. Everyone with me so far? So yeah. So, and before we get into this, by the way, I wanted to share with you that this isn't just hypothetical stuff. This is trades that we do ourselves. This is real money. We started an Acorn portfolio separate to my own trading and separate from other trading we do. We just started a model portfolio we started trading in October of last year ahead of the crash. Because remember, I told you about the crash in October. We predicted that using the same stuff we're talking about today. In fact, we did this exact webinar on September 27th and said, get ready for it. It's going to happen in October. So anyway, we started a portfolio up in October. And these are the results we've been able to get over 10 months. 140.5% profit on real money trades. That's the actual breakdown on monthly returns. 9.69% average every month for a total since October of last year of 140.59%. As you can see, that's very consistent. And that's consistent across all types of market conditions. So I'm not just here to talk the talk. We walk the walk, so to speak, if I can plug that colloquial term. And it works. That's the most important thing I want to share with you before we start now talking about this, so you can know that this is stuff we do, that we follow, that we trade and put our own money into each day. Because we have those rules and we have consistent ways to follow them. So as we push forward and start looking at what types of trades we want to take, we're going to start with looking at, here we go, a much easier way to analyze stocks versus going through the news. If my slide will bounce through, here we go. So firstly, the first component we want to take into account is what is the pattern. I mentioned the technical rating. So what is the pattern on the chart? Now, why is this important? Because volume dictates price. At the end of the day, it doesn't matter what the news is to a certain extent. It's how the volume reacts to it. Where does it buy? Where does it sell? And so volume is ultimately what dictates price. And who dictates the volume? Well, many of us here, I'm sure, already know, and JP Morgan confirmed this recently, that 90% of the volume in the market day to day comes from algorithms. So in other words, these are computers that decide when to buy, when to sell. These levels are predetermined long before the trade happens. It's not just day trading either. In fact, it's 60% of globally managed money as well. In fact, if you actually look at the amount of money that has flooded into equities that are managed through algorithms, it's flabbergasting. So we need to understand what makes 90% of the volume buy. We need to understand what are the rules that would dictate 90% of the volume to sell. Because if you're not ahead of those trends and noticing when it's happening and being able to get in and noticing when it's about to sell and get out, then you are significantly behind the 8 ball. So a pattern, whether you like it or not, if you're going to be a short to medium, even long-term investor, you need to know where 90% of the volumes, how they're making their decisions. It's such an easy piece to add to your analysis that it doesn't make sense to not do it, right? And the beautiful thing is that you're following the same rules again and again, which we can reverse engineer. So when we're looking at finding a great trade, we're looking at what is the pattern, and then we're going to look at the fundamentals. Then we're going to go beyond technical analysis, beyond the funny haramis and bullish hammer candles and Ichimokus and all those funny terms that we learn. We're going to go beyond the chart, and we're going to say, what about the underlying value? What about the underlying story? Because if I'm going to short the stock, I don't want it just to be a head and shoulders. I want this thing to be fundamentally weak. I want this thing to be running out of money. I want this thing to be in debt. I want this thing to have no cash flow. I want this thing to have, bad biscuits, so to speak. Rotten apples. Now, problem is, I'm not a fundamentalist. If you showed me, 10 years of quarterly reports, that would basically be all Greek to me, right? All Hungarian in the context of today. I wouldn't understand it, nor do I have any interest in it, to be honest. Maybe perhaps you do, great. But most people aren't going to have the knowledge or the skill set equal to that of Goldman Sachs or equal to that of the people that run the company. And in fact, that's my point. If we're going to look for fundamental weakness, let's ask the people that own the company themselves, the experts in their own companies. Because who's going to argue with a chief financial officer of the company you're looking to invest in or short? And they will tell you what the fundamental picture is. Now, they're not going to tell you in black and white. They're not going to tell you, hey, they're not going to come out on television and say, hey, Johnny boy, and everyone else out there in the world, look, it hasn't been a good couple of months. We've been hit by the Chinese impact in trade or whatever the reason might be. And so we just wanted to warn you all that over the next couple of weeks, we're going to sell 30 to 50 to maybe even 100% of our positions. Me as a CFO, our CEO, he's going to sell some too. The chairman of the board, he's going to probably get rid of at least half of his stock that he's held onto for the last 10 years. We're going to sell all of this, and we wanted to let you know first before we did that. Does that ever happen? Has that ever happened at any period in time that you can ever remember? No, absolutely not. Because who would buy a stock where the company's coming out and saying that? Would any of you? But the thing is that hundreds of millions, if not billions of people do every day, because it's not announced as news, it's announced as insider trades, inside transactions. And the beautiful thing is we can track that. So if we can combine an awesome pattern along with very weak fundamentals, potentially signaled by heavy insider selling, this is where we find some amazing opportunities. And if we tie that in to what we've just talked about in terms of the overall market, not only is this a good strategy every day, and this is how we find all of our longs and shorts usually in normal markets, for the last 10 years. But when we get markets like this, where we are reaching potentially very bubble type areas where sharp sell-offs could occur, this is where you can really bank some big bucks by searching for these special opportunities. And that's what trading is all about, right? I mean, I'll come back to that point in a minute. So let's talk about these trades. Let's start with this one. Now, all these trades I'm showing you here, these were all made with real money by myself in the Acorn trading portfolio. So when we talk about that 140% we've made on our portfolio, it's doing trades just like this. And these are the exact trades we send out to our students, and we teach our students how to find themselves as well. So ALGN is a great example. Have a look. Let's start off with the pattern, shall we? Let's start off with the pattern. These are the rotten apples that you already want to be short, or already would have wanted to be. So again, if we go back to the context of what I've been talking to you about, MMFI, stocks above or below the 50-day moving average, hit a high of 85% and has been going down ever since, back in March. So ever since March, I've been looking for the really good shorts. And obviously that's continuing to go lower still. So the S&P hasn't yet matched up with what stocks have been doing. So the opportunity is still very much still there. But it started back in March. That's the time we start to do looking for these types of trades. Much like in 2018, we started looking for shorts in July before the market crashed in October. All right. So let's go on to ALGN. So we started looking and scanning for stocks that had these beautiful technical patterns along with heavy insider selling. And you're going to start to see this recipe now come through. Because this stock, as you can see, let's just take the moving averages off here because they don't matter in a head and shoulder scenario. Can everyone see the head and shoulders here? Can everyone see that? Okay, great. So a head and shoulders is the highest, ranks out of 100 and something odd patterns out there. Head and shoulders ranks the highest probability short pattern in a bull market. If you weren't aware of that, I mean, this is what I spent 10 years doing, was studying patterns. If you want a guy who knows patterns, that's me. That's what I specialize in. I'm not a Forex guru or a options guru. I know two things really, really well. I know how to find very high probability patterns, and I know how to track the insiders. That's what I've spent the last 16 years doing. 10 years specifically just focused on patterns. Head and shoulders is the highest ranking out of all patterns to predict a downward reversal in a bull market. And so you've got that exactly right here. And when we see that, we measure from the head to the neckline, and that tells us at least how much that stock should drop. There you go. So when that stock dropped below that support line, we picked up some August $260 puts, and we put roughly, I think it was $3,600 of cash into that options play. Now that was step one, because this pattern predicted that we were going to drop at least down to 230 or lower. The next step, now we've ticked off the pattern, was what about the algorithms? What about that 90% of volume that we discussed earlier? Well, we're accounting for that in part by looking at the pattern. That tells us the rules of what setup is forming. But now we want to know the strength of the pattern. Is this a really, really good head and shoulders, or is it a weaker one? And to that, we look at money flow. How much money is going into this pattern or this play or going against it? And that's when we look at the indicator down the bottom, Twigs money flow, or as I call it, the smart money indicator. It's the only indicator I have to have on my chart for every single trade. In fact, I only use moving averages, support and resistance line, and Twigs money flow. Those are the only three things I need on a chart to make the results that we're seeing. Keep it simple, right? So you can add other things to it, Keltner channels, Ichimoku, those are all great things. But I mean, I like to keep it simple. So this indicator down the bottom analyzes if the stock is going up with increasing amounts of volume. Looks at all the things that tell you if a real trend is happening. And a real uptrend is only happening if the stock is going up and making higher highs and higher lows, but as well is doing that with increasing amounts of volume, and as well doing that while increasing the range. So the candles it's moving up more and more and more each day. And in terms of the amount that it moves day to day, as well as closing at the top of that range. All of those things have to be happening if a real uptrend is occurring, which means that money is coming in, loading up, and holding on to it. So when we see that that's not occurring, this line drops instead of going up. So can everyone see that as the head and shoulders appeared up here, that smart money was going out the back door? Can everyone see that? So I want to make sure I'm explaining things clearly enough. Awesome. Good, Dan, Don, Ellen, great. Okay, so that's step two. So step one, do we have the pattern? Yes. Step one, pattern. Step two, smart money from an algorithm side of things. And now we go to see if we have something really extra special going on as well that can increase our probability significantly. And there we do. Look at that. You've got the CFO, Chief Financial Officer, selling 45% of his stock. You got the Senior Vice President, Managing Director, selling 57%. You've got the Senior Vice President of Information Technology selling 70%. I mean, it goes down 94%, 100%. I don't know about you guys, but who in their right mind would buy a single share of that company knowing that you've got the people that know best selling almost all of theirs? Not much of a vote of confidence. Would anyone, I mean, tell me if I'm missing something here. Would anyone in here buy stock in a company where the insiders were dumping close to 100% of their stock? I mean, they were obviously right, because the thing plunged now down to as low as $170. So again, you can do all the research you want. I'm not saying fundamental analysis doesn't have value, but they're already doing it for you. So why would you argue? I mean, they're telling you right there what they think of the valuations of their stock. Now, and at the very least, it takes away the chances that the thing is going to double, because no one in their right mind on the inside that obviously knows what the company is doing would sell their stock 2 months ahead of the stock doubling, right? That just doesn't make sense at all. Okay, so this was a trade again. I said we put $4,000 or close to $4,000 into those options. We sold those 2 days later for close to 20,000. So that's a real trade. for an option, taking advantage of an option setup. And this is the time when I like to trade options. I'm normally a stock guy. I like to set and forget. I generally don't watch the market during the when the market's open. Especially when I'm traveling, like for the last 3 months, we've been in Europe. So, you know, when the market's open, it's like 9, 10, 11 o'clock at night. It's dinner time, you know. But in these kinds of markets, these explosive kinds of moves are happening. And this is when it's time, it's worthwhile going the extra mile for taking advantage of these things, because that's where really big money can be made. Let's look at another one. Okay, GoDaddy, GDDY. Now, so GDDY was another real beauty. And you'll see the exact same recipe being applied here. Let's just zoom in. Okay. Can everybody see the head and shoulders here? Can everyone see that? Right? So we had a head and shoulders set up, just waiting for that to do, trigger. Okay. There we go. So here we go. I'll just show you the how this all came about from start to finish. So we found this. We scanned for stocks with heavy amounts of insider selling that had a potential. This is a scan that we designed. It scans for these types of patterns where heavy insider selling is occurring. So we found this, and we programmed in for if this were to rally up and create that right shoulder, to short it. Okay. And I'll see if I can find the alert for you. But as you can see, that exactly happened. And then if we go back and have a look at the insiders to see if that confirms, you can see that they were selling as well. 99% from the Executive Vice President, Chief Infrastructure Officer. The CEO sold 16% at the beginning of the year, then sold more, another 3% here. You can see the Chief Accounting Officer was selling the whole year. 1% there, 15% there, 15% there, 4% there, 4% there, 4% there. It's a slow bleeding out of getting rid of their stock. Okay. And as you can see, they were right again. You might see the S&P 500 going up, but this certainly doesn't reflect that, does it? This plunged from the $76 area where we bought our puts, and as you can see, all the way down to 63%, which was over a 209% profit on that option trade. So the first one we had $4,000, which we turned into 20. I think on this one we had $5,000, which we turned into 15 or so. Same setup. Let's look at another one. You can see this all working through PKI. Okay. Again, can you see the head and shoulders here? The number one highest ranking pattern in a bull market to short. It's the same thing again and again and again. Look at this. The stock's going up, creating higher highs. The smart money is getting out. Right? Again, a stock we bought puts on. This was 105% that we did on that. But look at, so you have the pattern, the 1, 2, 3 punch. You've got the pattern, tick. You've got the smart money indicator saying that the volume's flooding out, tick. You've got the insiders. Where's the insiders? Okay, I'll find that one for you. But the insiders were flooding out of this one too. Let's see if we've got that. Does everyone see what I'm getting at here? And when you start to talk about consistency, about wanting to make consistent profits in the market, so you can have an income, around your trading, because hey, you can consistently make 10% a month, or 5% or 15% a month if you get more, depending on your aggressiveness. I mean, if you're going to trade for an income, you need to have consistency. If you're building your retirement or protecting your retirement, you need consistency. So you need to have consistent rules. So, I mean, as you can see in each of these scenarios, that word consistency keeps coming out. We're looking for the same thing again and again and again. Okay, and here's the PKI. There's the insider selling on PKI. Huge insider selling all the way through. Right? And one that we're still holding, last one I'll show you, one that we are still holding on to, TRMB. We bought the puts. We bought the puts on this. It was 131% profit. The puts went from $1.82 to $4.22. Again, head and shoulders, which started in July. While this market's going up, this was the rotten apple that we're looking for. This crashed. And as you can see, once again, the insiders were dumping it. I'll just bring that up for you. There you go. Insiders dumping as much as 100% going into the earnings. So this is exactly what we're looking for. And as you can see, as I said, this is a recipe that we're following. I mean, we've got very dangerous stuff going on. You've got an all-out trade war, on the verge of an all-out trade war, in an economy where P/E ratios are beyond historical norms, about 175% beyond historical norms. You've got more money being borrowed than since 1960 to fuel these speculations, and all it takes is for the bubble to pop, for the algorithms, which represent 90% of the volume. All they need is that sell signal. They don't care about politics. They need that sell signal, and they sell, and the market crashes. And it's happened 3 times last year. It's happened once this year, and it's very likely to be around the next corner come September. And there's an opportunity to make some really big bucks in that. And that's where we really rock it. It's where we do best. And we are primed and ready for it, because we are scanning for these setups, and we have been now for the last couple of months preparing for it. So going into this without a plan is at the best case scenario is a waste of opportunity, because there's a lot of money that can be made here. So it's a waste of opportunity, and also without knowing exactly what you're looking for, you possibly risk wasting time. The worst case scenario is you end up getting on the wrong side of it and then end up losing a lot of money. So we put together a very special program which we are launching today. We do this in scenarios where when there's really big opportunity in the market. We call these events the big ones. We did it in September of last year, ahead of the crash. We did it in January of last year. We were short both those times. We were short going into a couple of months ago with all those option plays I just told you about. And we're getting ready for September 1st now. So we call this event the big one, and it's a very special package we put together, launching today, which covers all of the components over 3 months that you're going to need to take advantage of this. It's only $397 as a special offer for today. It covers a few things. Let's talk about that. So firstly, the first part is the educational side, because again, whether you're just going to follow what we're doing or not, I still think it's very valuable to know why, to have a level of confidence and understanding in what you're doing with your money. You know, you worked very hard for your money. You've saved it. You didn't go on that holiday one year to put some extra pennies in the bank. Don't waste it from doing silly things in the stock market, right? And so you should have a level of understanding of what your strategy is all about. So whether you're going to do it yourself or not, this will give you that full knowledge, start through finish, of everything that we do. starting with the smart money systems. So I talked to you about the 50-day moving average system we use. There's a whole module on that. And there's 2 other smart money systems that we use to predict market turns and big market turning events. That is also a system that is covered in module 1. And for those of you that do like to track the S&P 500 closely, there is an indicator which is included in this package that over the last, backtested to 1960, has had close to 1,700 signals on the S&P 500, and approximately 90% of them have been accurate, predicting the S&P 500 movement for 3 weeks, 2 to 3 weeks ahead. That will blow your mind. That is worth the $397 right there. It's part of the package. That indicator is awesome. Now, we don't use it to trade the S&P. You could, but we use it to dictate when S&P 500 direction shifts happen. September 1st is the next turning point on that indicator as well, which makes it very exciting. So that's part of module 1. That then progresses into the patterns, because I've talked about patterns a lot. So in this educational component, we're also going to teach you what are the highest ranking patterns. Why are they the highest ranking patterns? What types of patterns do we want to avoid? How do we specify entry and exit signals so we know when to get in and out? There's a process to all of that. Everything is rules. Everything is black and white, A, B, C, D, so that you know you have a structure to follow, which is very important, especially when markets get exciting. Okay, and then finally, we will be going into these scans themselves. So we are going to give you lifetime access to our smart money scans that we have developed. And that includes the smart money long scan. That searches for where multiple insiders, 4 or 5 or 6 insiders are all loading up, usually buying 3, 4, 5, 600% more stock in their own company at the same time. When the market's right, that is an amazing. I use it mostly for stocks and some option plays. That's really, really cool. If we get time today, I'll maybe touch on that. But yeah, that's how we find all of our really, really good longs. And every long I'm holding right now is where there's significant insider buying going on. And those are still going up. If this market continues to break as it looks like it is, where a lot of the money being made over the next couple of months is going to come from is the smart money short scan. And this is looking for companies with no cash flow, high debt, huge insider selling, and a perfect pattern. So we're going to give you these scans so you, for life, will be able to have those to scan for and look for where these exact opportunities we've covered today are going on. We show you how to look at the data, the research behind it. It's really quite simple once you have the tools. So we give you all of those in that module as well. And going into September, we're going to actually be doing this live. So on Tuesday, September 3rd, which could be D-Day, we're going to do a special live workshop where we're going to actually go in and run these scans with you live, picking out our favorite shorts that we're going to take with our own money. We'll even place the trades live in the room with our own money. And we'll be looking to take about 5 to 6 trades where there's huge insider selling going on, setting up just like the trades I showed you before where we booked as much as 400% on ALGN. So the live component will allow you then to see it done right in front of you. That gives you lifetime access to that course and lifetime access to those scans. So that's a really good deal, and it's done again live in front of you, which is normally something we don't do, only when special events like this are occurring. What we're also going to include for you then is the support for 3 months. So on top of the scans and the education and the live lesson, we're then going to follow that up with publishing for you our favorite 5 trades every week at the beginning of each week for 3 months. So we're going to do all the research for you. And at the beginning of each week, you'll get a video from me saying, these are the 5 trades I'm looking to get into this week. They could be a combination of longs and shorts. It could be all longs, all shorts, depends on what the market's doing. We'll continually update you on what the market is doing and where we're going with it. You'll get text message alerts throughout the week. You'll also give you updates on all those positions. So after the entry has occurred, we'll send out updates written and in video saying this is where we're updating our stop loss to. Okay, the market's reached a real drop. We're going to take 50% of our profit off the table now. All of that we send out to you. And on Tuesday, Thursday, we'll also get together live at 4 p.m. Pacific, 7 p.m. Eastern, where we'll discuss everything we're holding and all the trades we're in and what the market's doing and take questions. So that's what you get. It's all included in $397, as well as the full 3 months of access to all of that. Okay, so we only have a few minutes left, but do you have any questions on this? Okay, how much capital do you need to invest with? Look, I mean, in these kind of markets, it's about quality, not quantity. So, you know, that's why we've set it up to publish our favorite 5 each week. We might find other trades throughout the week that we'll let you know about, but the idea is to wait for the really juicy opportunities, because if you get into the wrong ones and the market plummets, not only could you get burned and the trade could go the wrong way, but you could miss out on all that opportunity that you could have been making being in the right position. So it's about opportunity cost as well. So we spend a lot of time showing you and following the process of focusing on the ones with only the big amounts of insider selling. So not just one insider selling, not two, but everyone. Big percentages and the best patterns. Okay. Have taken in the past was an awesome course. Thank you, Johnny. Oh, you're most welcome, Rhonda. Hope to see you in there again. Do we cover position sizing? Absolutely we do, because it's not just about picking trades, it's about capital management. How much of my portfolio do I want to risk if I'm buying an option? How do I want to get into an option at all if there's earnings coming up? Should I do that or not? If I'm going to take a stock position, do I use margin? When do I squeeze? Now, you obviously have to determine what's right for you, but we're going to talk about what we do and the ways that we calculate that. It's very easy. We even have a risk calculator, which we give you, so you can, whenever you take a trade, you can punch those kind of things in. It'll tell you what type of risk is there and how to calculate your own position sizing. Are we in the States? My card always thinks it's from out of country. Our headquarters is in Canada, but we are worldwide. So we have representatives around the world, but our headquarters is in Canada, in Vancouver. If you have any problem with putting the card through, we can always help you do that over the phone. I am out of time, so let me put that up on the chart for you, the chart on the screen. If you have any issues, let us know. So once again, this is the first time we've ever offered this program, combining the education with the live lessons, the indicators. You get all the indicators, as well as the smart money systems, and 3 months access to the ongoing alerts, which is invaluable. So I hope you'll join us for what I think is going to be another very key bookmark in the market, and we're going to help you make the most of it. So again, thank you very much to everyone. And if you have any questions, let me know. The cost. So last question: what is the cost after the special? Ongoing cost for the class. Excuse me. My voice is finally kicking out. Is normally $147 a month for the ongoing live lessons. If you just want the alerts after the 3 months, you have a special promotion of only $59 a month after the 3 months for people in this program. So you'll be grandfathered in at those rates. So after 3 months, you can determine which you want to continue on the live classes as well, or just the alerts. And you'll have a full 3 months to determine the value of that for you, which I think you'll be impressed with. So again, thank you, Silas. Thank you for everybody at TradeThirsty. Again, have a really wicked weekend, and I'm looking forward to listening to the next speaker.